A few months ago in my Facebook community, I posted a message about a 7-figure Amazon seller in the UK who is having 70% of his VAT returns rejected by HMRC because he's made one simple mistake. And I want to share with you what you need to be doing, because this is going to cost you thousands if you do not do it. This is the post, and you can join Fast Track FBA UK Facebook group. This is taken from a 7-figure seller who I know about September last year. The business, his business, is purchasing goods from a high street retailers, websites like Harrods. Now, he intends to export these goods. However, the company has not been properly informing the retailers that it is a taxable entity that requires a VAT invoice. Now, the company has also been purchasing goods through third-party agents, which complicates the VAT process. These agents need to provide a VAT invoice for the company for the right deduction to be claimed. So this basically means that he's putting them in his name, not the company's name, so he is an agent of the company. Now, HMRC found that the company records did not automatically grant the right to deduct, so that portion that they wanted to deduct was not allowed. Now, HMRC also pointed out the company has been not collecting valid VAT invoices at the proper time, and most of the evidence holds cannot be adequately linked to the business. This puts HMRC at risk of multiple taxable persons claiming the right to deduct the same input tax. So this basically means that while you bought a product from the supplier, Harrods for example, you put it in your name so you could claim the VAT back, but also as well you're trying to claim it on the company as well. You could claim the VAT twice, which obviously you shouldn't be able to do. So in this case, to protect HMRC, they say only the person named on the invoice is allowed to claim the VAT back, which is the director, not the company. The company has not been ensuring that its documents meet all the relevant requirements of the VAT regulations. This includes a range of information such as sequential numbering that uniquely identify the document, time of supply, date of issue, name and address, registration number, VAT registration number, supplier, among things. Now, HMRC has determined that the company does not have the automatic right to deduct any tax input on the supply to which relates to non-compliance with VAT regulations. Now, ensuring suppliers its taxable status within 30 days of supply. And then finally, HMRC plans to disallow 70% of the input tax claimed in previous returns unless evidence is provided the 29th of September 2023. So this is crazy. Like 70% of the money that they're trying to get back on the VAT, i.e. money paid, HMRC is saying no because of the fact that they put it in the director's name, not in the company name. So what does this mean for OA and RA sellers? We usually clearly do not inform retailers that this purchase we are making when we do OA and RA is for business purposes, so it is what's considered a non-taxable transaction at the point of sale. Order confirmations are not enough, and if you are using employees, friends and family, or relatives to do RA, OA, if they sometimes have them shipped to their address, this isn't acceptable because they're buying it, not company, which is so they're the taxable person. Now I want to show you the pictures of it, so to show you what's happened. So this isn't perfect, but it kind of gives you an idea. So check the VAT return, what happens. So they're talking about HMRC here, and again this is taken from the screenshots. They're not going to be the best quality, but they talk about retail supplies and VAT, but really it's saying here like proof of purchase documentations received and requirements of what's required on a detailed VAT invoice and the regulations and the business background. So there's lots going on there, and they kind of give some examples. The key point that you need to be making sure you're doing is whenever you are putting an order together on a website, put your company name in address line 1, then the address. Why? Because if HMRC ever audits you, you can be able to show them that invoice and it's got your name, it's got the company name there, which is going to be very clear that it's for the company, not for you as a person. So therefore you are much more likely to be able to get the VAT reclaimed on that, and there's going to be no problems if you get audited. Now I tell you this now, why? Because it's very likely that you are not going to get audited, but if you did, then you're probably going to have a lot of money in the line, and if you just do this one simple thing, it's going to change the game. And by the way, you might be asking the question like, hey Tom, lots of sellers aren't going to get my orders or cancel them. Well, you know what? I'll just go find other suppliers for you. Just focus on those suppliers that actually want your money, not those that you're trying to hack, because you've got to keep growing this business. And if you're going to grow, it's probably going to be likelihood that A, they're going to cancel orders, or B, you're going to get audited. The last thing you want to do is lose 70% of your VAT return. I hope you like that. If you did, drop me a comments down below, hit the subscribe button. But for myself, Thomas Parkinson and Fast Track FBA, thank you very much.